Here at Longin's Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.
Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hello, Mel, and welcome to the podcast this week. How are we doing? How have you been so far this week?
Hi, Peter. Thankfully, it's sunny again here in Manila after a very, very strong typhoon that hit us over the weekend. Gladly, we're doing okay. And work-wise, we are also building towards a new magazine very soon. So that's what's been keeping us busy here in the Manila office, Peter. How about you? Good trip from Germany?
Yeah, back in the office and yeah, extremely busy with raising money for our defense fund and also our own capital increase at Longrange
Mm-hmm.
Capital. Um, Speaking with a lot of investors, so yeah, and the markets are always always interesting. So also business as usual, of course. So pretty busy, and that's nice. There's a lot to do before year end. So yeah, we don't complain. If we look into today's sort of different topics, we will start in Japan with some new tax incentives. That's very interesting, actually. And then we stop by in China, just sort of elaborating a bit about the domestic market and how extreme competitive it is. In Europe, we will have a look at the European Central Bank as a lot of seats in as executive seats positions will soon start to rotate, or the sort of the work, the preparations for the new people in charge will
Mm-hmm.
start within not very long. And then we will end today's podcast with a bond issue that is returning to the market after more than 300 years break or absence, so to say. And of course, we have our global outlook and see how much sunshine at the very end. But let's jump into Japan. Japan is yeah, is completely interesting. And what are they up to now? Mel, tell us.
Under the new Prime Minister Takaichi, which is just maybe a few weeks old, parliament under her, they are exploring a very aggressive expansionary policy right now. So they are taking it on both the retail and corporate fronts. On the corporate front, of course, that's very interesting that they are looking to offer tax incentives to new investments into Japan. They've identified 17 investment areas. And of course, AI investments is an area that they really want to develop. Their other areas are minerals, aerospace, defense. So quite interesting to hear as well. Cybersecurity, microchips, and shipbuilding within Japan. So these are quite a number of sectors that they want to develop by enticing foreign investors to come in and enter that market, build from Japan maybe, or set up offices within Japan. It is quite necessary at this time because it's getting harder to attract new investments to Japan. While it is a very highly industrialized nation, they're also grappling with unique issues like while the rest of the world is cutting interest rates, in Japan, they're starting to raise rates. Of course, we know that they have an aging, a shrinking population. So that's also a concern as far as labor supply is concerned. And on the public sector front, they have a very high debt level, which of course is another issue for potential investors. But the openness to technology and available talent, tech wise, could be promising, yeah, promising segments that would, give that nudge on top of the tax incentive. The IMF actually projects that business investments towards Japan will slow down to
mm,
2026. So about 1.5% growth recorded in 2023. And
mm,
the estimate is it will be down to 0.9% next year. So I get where the new prime minister is coming from. And on top
mm,
of that, they also want to support consumption. So subsidies on gas, utilities spending, food grants amid high living costs. Inflation is going up
mm,
as well in Japan. That's why they're raising interest rates. And
yeah.
some aid is being explored for companies and households suffering from higher costs due to the US tariffs. So
Mm,
the details are not public yet, but estimates so far put it at $64 billion. So that's about
mm,
1.52% of GDP. So quite
yeah.
quite
Mm,
substantial
yeah.
if it does push through at that level. But at the same time, of course, there is that concern about, does Japan really have room to hand out that much subsidies or
Mm,
forego new tax collections at the time when their debt to GDP ratio is at 240%. So
mm,
that's the that's the issue there, Peter. But otherwise, it is of course encouraging if you're the investor looking to explore a new expansion or
mm.
checking Japan as a potential site for operations.
Yeah, but it's interesting. Again, we talked about India latest that
Mm-hmm.
was using tax incentives to try to give a new impulse in the economy. And we have seen across Asia, Southeast Asia in particular, within the past, let's say, 6 months, that the
Yes.
tax is an issue in the way that it's a tool that is lowered to either increase private consumption or make life better for the corporates. It is interesting because it puts pressure on other countries, and in particular countries that are in a position where they have difficulties lowering the tax because they simply have a cost pile, and
Right.
particularly thinking about the old economies in Europe. Yeah. So that is interesting. It's just uh, yeah, one more step with lower tax pressure in Asia, and that's interesting. This should be of a size that it could move something in the Japanese economy. Also, be positive for companies. Yeah.
Mm-hmm.
So
Right.
interesting. Then we promised to jump over across the ocean and the
Yeah.
Chinese Sea and sort of elaborate a bit on China. And
Mm-hmm.
again, we see examples on how competitive China is. What are the sort of the latest developments, Mel?
Apart from the tariff war that has exposed just how dependent the world is on China, particularly
Mm,
Chinese made goods, it's also becoming very apparent that the rest of the world is not or could not easily navigate the domestic Chinese market as they think as easy as they think it would be.
mm,
The trend now, actually over just the this month alone, global brands like Starbucks and Burger King, both very popular elsewhere, apparently not in China,
mm,
both have decided to sell their a majority stake of their business in China to domestic partners or equity firms, which are more capable of um, maybe they know the market more. Basically, it's very competitive. Apart from facing competition from other American brands, they are highly competing with homegrown Chinese brands. So, from coffee to milk tea to fried chicken to burgers, it's a battlefield that apparently they think they could not win. So, Starbucks sold 60% of their China business to a local partner. they keep the 40% just so they have the franchise rights still in China. For Burger King, they're pursuing a joint venture with the local firm also. The result here really is that these global brands, however good they are elsewhere, it appears that they've come to terms with the fact that they cannot familiarize themselves with the domestic Chinese market as much as local partners can do it. So that's the logic behind taking a local partner or selling off a majority stake of their domestic business to private firms within China. They retain a small share of ownership just so they could still grant the franchising rights and the branding to these local partners. But as far as operations are concerned, as far as strategy for expansion, for marketing is concerned, maybe even the actual products themselves, they leave it now to their local partners who know the mainland consumer market better. On the flip side, we see Chinese brands really having a great momentum outside of mainland China. So there's this gap between knowing that market and their operations elsewhere. China has very recently expanded BYD in Brazil, and that's part of the larger pivot towards Latin America when Trump revived his trade war with China, and it's paying off well for the Chinese brand. Um, on the other hand, the American Tesla is not performing so well either in China. So, really, apart from market knowledge, I think there's some patriotic angle at play here. They don't know that as well as the mainlanders do. And
Yeah.
this is a show of China's might as far as an economic power is concerned. Their markets need closer study versus how the global giants do it for other
Mm.
markets. And you can't
Yeah.
simply ignore China because it is literally a billion people. And yeah, I think we could see more of these outsider multinational brands taking this strategy if they want to really be competitive with the Chinese rivals, so to speak.
Mm.
Yeah, it's clearly a different animal, and it's still a market that you need to be in.
It's fascinating that even such globalized big American brands,
Right.
they have difficulties keep up the earnings in China.
Mhm.
It's seen so many times before. Many years back, some of the first to give up were actually in logistics, the
Yes.
whole last mile parcel service, or also in as across China. You've seen the FedEx, UPS, DSL of the world. They've all given up the business in China. They could simply not run the operation in China with the same efficiency, cost efficiency, as the Chinese
Elsewhere.
competitors could.
Mhm.
And the Chinese domestic market, it is a sign that it is completely fierce. It is so fierce that during the COVID-19 crisis, where some of the Chinese export markets were shut down,
Mhm.
there were rumors that the Chinese exporters they tried out to say, okay, so where can we go with our products? Of course, we can go to the Chinese domestic market.
Mhm. Yes.
Rumors were that the Chinese domestic market was simply too competitive, too fierce for the Chinese exporters. They were simply not used to maneuver in such a competitive market, so they gave up. They gave up selling to their own Chinese market and just waited to the export market to open again, so they could have a bit more peace and more easy market to move around in. That is, and it's seen so many times. And we've
Mhm.
seen again and again Western companies establish themselves in China. They might have something, in particular when we're talking on business to business, that as a Chinese client they want,
Mhm.
and that is another story. But in general, and in particular, if you are into the selling into consumers, Chinese consumers, if they're involved, it is too difficult. And what does it mean for investors, international investors, outside China investors? It means that the only way to get the right exposure on domestic China is to invest into Chinese companies. It is not enough to invest into a Western company that has, let's say, a pretty large part of fair share of their sales into
Their
China.
upper limit.
It's
Yes.
not giving the same exposure, and that is basically what investors should take away from that. That they need to be involved in to Chinese companies to get the domestic China
Right.
exposure, and it's of course a complexity because the Chinese market also the companies are simply different than what
Yes.
the Western investors are used to look at. So but it's fascinating, Mel, the story that you're bringing forward there. Again, it just confirms it's a difficult market. My God, but it's big, and
Yes.
that is the attractive part of this.
Cannot be ignored, Peter.
Yeah. So, are there sort of, by the way, are sort of any Philippine companies? Are there any of sort of Philippine brands that have made it into to China?
I think, Peter, a lot of our companies, if ever, maybe just the fast food chain are popular, Jollibee
Yeah,
probably, but not
yeah.
so much. I think the direction is really more Chinese companies in the Philippines more than the other way
Yeah,
around.
yeah. As there's no doubt that the Philippines is an outsourcing destination for Chinese companies. They have a lot of goods produced in Philippines,
Mhm.
and that is actually now and then re-exported back to China, and that
Yes.
is not going abroad away. It's going back to China. That's interesting.
Yes.
Good, good. Yeah, that was a story from the big cities. Yeah, let's turn into a bit sort of a bit more basic. The European Central Bank, basically in 2027, they will
Hmm.
change personnel in 4 out of 6 executive seats, and one of them is the as a Lagarde that is also stepping down. So it's a top position.
Yes.
And you could say, okay, this seems a bit premature. No, actually, the first seat to change is a vice president seat. There will come a new person in May 2027, but already now the game starts, and they are looking. The decision takers are looking at resumes for the first person
To
to
replace
take
that
up
vice
this
president.
vice president position. And the
Hmm.
key is it's a big puzzle. It's a puzzle about who uh, as a from which country should have the position now in this
Hmm.
EU-wide ongoing puzzle, and there's a gender issue. There's
Right.
underrepresentation of women. There's a lot of issues to take care about, and on the very last end of the list is actually what it's all about. It's a monetary policy, but why it's interesting to follow what's going on is sort of what I would say basic knowledge about what you as an investor simply
Needs to know. Yeah.
I'd not say should know because that's
Mhm.
up to the individual investor, but it's good to know. But it also already now gives a direction about who will get the lead.
Right.
Also, who will get the presidency of the ECB? Because the more the new coming vice president, the first seat to change, will be skewed in one direction, the
Hmm.
more likely is that the ECB presidency will be skewed in the other direction. Meaning, if it's a Taoist person that gets the vice president's seat, then it's more likely that it will be a hawkish person getting the ECB president seat. And that is of course sort of all these
Right.
first indications about where the wind is blowing. Right now, for the ECB president position, there are 3 names in play. There's the current president of the German Bundesbank, the German central bank.
Hmm.
He's one of them. Then we have the prior head of the Dutch central bank. And then we have a Spanish guy. He is also prior, of course, central banker in Spain. Now he has a very good position at the Bank for International Settlements, BIS,
Right.
in Basel, in Switzerland. And these are sort of in the play right now. it should be maybe Germany is actually in line, but it has never interested the German government too much to get the ECB presidency. So it could easily go to another person. But the game is going on, and that is interesting to just sort of to follow on a distance now and then, because it will be determined for how Dawes or how hawkish the central bank will communicate at some time. And we also know when new names are in place, then it
Hmm.
actually reduces the power of the current person who is in the seat, because people knows this is
They're on their
now
way
is sort
out.
of so that also have
A
a,
few
a
episodes ago, Peter, we thought the US scouting for Powell's replacement was too early. But here we hear the ECB names coming up more than a year from now,
yeah.
to fill
And
vacancies more than a year from now. So that's really a very unique dynamic as well, because not only do you
right.
have states, but here you have actually countries who, of course, want to maybe have a bigger say in the bloc's policy
Yeah.
making, and that is of course a lot different than like individual state levels that want the clout and the leadership in the monetary policy making space for the region.
Well, if anybody should have the interest to go for the ECB president's position and want to drop their resume somewhere, we don't know where they can send it, but we can disclose that the yearly salary is 466,000 euros. It's about
Wow.
what do I know? It's close to 525,000 US dollar per year, and there's a lot of benefits on top. Plus, there is actually also a seat in the board at the BIS, the
All
Bank for
right.
International Settlements, and that will bring you another 100,000 US dollar. So it's not a bad position to go for. So there will be some interest. We are sure.
They won't run out of candidates, Peter.
No, no. Otherwise, another sort of a thing to notice that is, after all, interesting, and it can be strategically interesting. There's a new, or it's not a new issue in the bond market. It is
Hmm.
an old one that is back, and that is actually Scotland. The last time they issued a bond, it was in the late 17th century. It means it's like 325 to 350 years ago that they were in the market last time, issue bonds. A lot has happened since. Today they're electronic. At that time it was pure paper, yeah. But a small interesting piece in this story is they have got of course, a rating, and they were signed with a double A rating, a clean double A rating, and
Hmm.
that was a positive surprise, I would say. It's higher than I would have
Given
guessed
them.
if I was asked. And that has an implication into the political game as well.
Hmm.
We know that uh, there's a lot of discussion back and forth about Scottish independence,
Yes.
but one of the reasons why some voters maybe voted against independence last time was very much doubt about where a Scottish rating would be. And the doubt at that time was it would be much lower, and that means they would have difficulties, or it would be very expensive for them to fund
Their
themselves in
own.
the
Yes.
bond market. Now, this is nowadays a fine rating for a European country, and could give more confidence for the people who goes for independence. Now, it doesn't necessarily be a preparation for going independent that they are issuing again if they choose to do, and they have their own rating. It is seen in many countries that a province or a big also, city. It could be New York, or we also see European larger capitals have their own rating and also issue their
Hmm.
own bonds. So this is it's absolutely normal to also for a region to have a rating and to issue bonds. But still, it is interesting to follow, and of course, it's also interesting to follow to see if it pushes a bit on the strategic discussion about independent Scotland and then leaving
Mm-hmm.
England for itself. Yeah. So that was a small piece from 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 that area and quite interesting actually.
It's refreshing to hear something nice for the UK economy, at least one part of it for once, Peter.
Yeah, sort of surprised a bit positive in that part. Yeah. Otherwise, we as usual have our sort of global sunshine outlook.
Mhm.
A bit about how happy are we for risk? What is sort of the temperature, Mel?
Like our weather right now, Peter, the sun is shining brighter as far as
Mm,
Asia's outlook is concerned. Very recently, just the trade negotiations for between the US and China is actually lifting sentiment better. It might be the case that local markets, or at least Asian markets, will um, could finish the year stronger despite some turbulence earlier in the year.
mm,
We remain upbeat about growth prospects and investment prospects in this region, Peter. And like what
mm,
we talked about earlier, yes, the China as the largest economy here is a really tricky and difficult market, but it is a strong, growing, and large market, which investors should focus really and be part of, as what we've seen. And yeah, as far as optimism is concerned, we are optimistic about prospects here in Asia, Peter.
yeah. Also we still like risk. We still like to overweight risk. We have reduced from the very high a couple of times, and right
Mm-hmm.
now we still see the risk of a 10 to 15% correction in the market. But it's actually not enough to step out. It is enough to advise people to maybe reorganize the portfolio a bit,
Right.
take some profits in some of the segments that have gone up a lot.
Mm-hmm.
But that's basically it. We reckon that as a global growth is still a bit under pressure. It is, and it is actually at a low level. But the opportunities out there are still dominating, and that's how we see the world still. So we are okay. Sunshine and some clouds out there.
Yes.
So I think that is a picture again this week. And yeah, then it's only to say thank you for to the audience for listening. We were happy to be here, and we're looking forward to next week, Mel, to come back. Thank you for joining in.
Thank you, Peter. And of course, thank you to our subscribers for tuning in.
Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify. For expert insights on the go, download the Long Greens Investor Insights app for free. Risk-loving investors will find opportunities in our high-quality alternative investment funds, especially our multi-awarded mutual China fund. For more, visit longgreenscapital.com.